here's an ultimate guide on the best 4 ETF portfolio for long-term investing. If you want to make as much money as possible in the stock market while also being very diversified across many different ETF categories so you don't have all your eggs in one basket, then this 4 ETF portfolio is just for you. This 4 ETF portfolio literally has everything every investor can only dream of. Like exposure to some of the largest and best performing companies in the entire world, dividend income so you can live off of dividends as passive income one day, insanely high growth in the form of capital appreciation so you can get rich way faster, and finally a diversifying category that does not overlap with the other 3 ETFs in this portfolio so you can be as diversified as possible to grow your money as safe as possible. Now, when I made my original 3 ETF portfolio video that got a lot of views and so much traction, some feedback I got was from you guys that said that that portfolio had a bunch of fund overlap, and you'd be right, as well as that past performance does not indicate future results, which is also right. And finally, if I can also include another ETF or another ETF category that can make the portfolio more diversified than it already is for the benefit of extra diversification. Okay, so in this video, I'm going to provide a quick overview of the new and improved 3 ETF portfolio for all you newbies and also for people just generally curious about the 3 ETF portfolio. And then after that, I'll jump into another ETF category that can make the 3 ETF portfolio a 4 ETF portfolio to make that portfolio way more diversified for all you guys. So let's get started. The 3 ETF portfolio consists of 3 different ETFs, the first being a foundational or broad market ETF, the second is a growth or technology focused ETF, and the third is a dividend ETF. First up, we have that foundational or broad market ETF. Now, a foundational or a broad market ETF is an ETF that tracks a broad basket of companies from basically every sector of the stock market, so you're extra and super diversified. So think of those like your S&P 500 ETFs or your mutual funds, as well as your total stock market or even a total world ETF. The purpose of this category is to keep you super diversified to some of the best performing and even largest companies that the stock market has to offer. With a foundational ETF, the benefit is safety, growth, and consistency. These ETFs have been around for so long and even have only gone up in returns with everything that happened around the world throughout history. So this ETF category is almost crucial for the success of an ETF portfolio in the long term. Now, I also think that this should be where the majority of your money is, because it's also where the majority of my money is in an S&P 500 ETF like VOO or VOO by Vanguard. Some great examples of broad market or foundational ETFs are VOO, SPLG, VTI, and even VT. Also including the ones in this honorable mention list. Next up, we have a growth ETF. Now, a growth ETF is basically an ETF that invests in companies that are expected to grow way faster than the stock market, so you can have the best and highest returns possible in your ETF portfolio. Now, these growth stocks also have rapid sales, rapid earnings growth, and also super high valuations, which can also lead to outperformance in all the other ETF categories in your ETF portfolio. Growth ETFs will definitely be a very high risk yet very high reward investment. They will also be very volatile and also overlap the most with a foundational or a broad market ETF. Now, why we include a growth and even a broad market ETF if they have a lot of fund overlap is because if the best performing companies are in the growth or technology space, then we're going to include a growth ETF that has all those stocks from growth and also technology stocks as well. We're basically tilting the portfolio to include more of those companies and those high growth areas so we can capture the best and highest returns possible in our ETF portfolio. Some great examples of amazing growth ETFs are QQQM, SPMO, VGT, and SCHG, also including the ones in this honorable mention list. The last ETF in the 3 ETF portfolio is a dividend ETF. Now, a dividend ETF basically invests in dividend paying stocks, whether it's a high yield stock or a dividend growth stock, where these companies are the safest, most reliable, and cash flow heavy companies in the entire world. Dividend ETFs also have the benefit of actually growing your money through capital appreciation, but also having you get paid some sweet dividends for passive income that you can use that passive income to pay off some expenses in retirement. Some other cool things is that these dividend ETFs also have a super low fund overlap with a foundational and even a growth ETF. It will also be less volatile as well than the other ETF categories, making this a very good value position in your portfolio that is not exposed to mainly technology or even growth stocks. Some of my favorite dividend ETFs are SCHD, VYM, DGRO, and even FDVV, also including the ones on this honorable mention list, even a covered call ETF category as well. Now here's exactly how that 3 ETF portfolio would have performed over the last decade using backtesting. I'm going to be using VOO for that foundational ETF, QQQ for a growth ETF because it has the longest history versus QQQM, and finally SCHD for that dividend ETF category. If we invested 60% of our portfolio into VOO, 25% into QQQ, and 15% into SCHD, then our portfolio would have generated exactly 15.5% annual returns since 2016. The volatility or standard deviation would have been exactly 15.6%. We would have also outperformed the S&P 500 by exactly 1.2% every single year. Now that's all amazing. Now if you want to see exactly my own ETF portfolio where I invest in my own ETFs every single week, check out Blossom. It's in the link in the description of this video, and in the pinned comment you can literally see my ETF portfolio for completely free on this free investing app. Not only do you see my exact percentage allocations between my Roth IRA, my 401k, and my taxable brokerage account, you could also see exactly when I buy ETFs on a weekly basis, so check out Blossom. I will see you there on Blossom. So with all that out of the way, here's exactly some of the best ETF categories to combine with your 3 ETF portfolio for the most diversification as possible. The first category is a small cap ETF. Now, if you already own VTI or even VT or any other ETF equivalent, then you don't need to own a small cap ETF because small caps are already in those funds already. However, if you own something like a S&P 500 ETF or even a large cap ETF, then adding a small cap ETF with your original 3 ETF portfolio will make you so much more diversified since you don't have small caps in those ETFs at all. My top small cap ETF choices are AVUV, IWM, and VB or VBK by Vanguard. Here's exactly how this 4 ETF portfolio would have performed over the last decade since 2016. I'm going to be using the same ETFs in our original 3 ETF portfolio with VB, a small cap ETF by Vanguard, because it has a long history of returns. So VB is going to have a 10% allocation with the foundational ETF of VOO now just a 50% allocation. So this 4 ETF portfolio would have generated exactly 15.1% annual returns since 2016. The volatility would have also been a little bit more at a 15.8% standard deviation because small caps are quite volatile. And this also outperformed the S&P 500 by exactly 0.8% every single year. The second category for our 4 ETF portfolio is a gold ETF. Now, the great thing about gold is that it has a low correlation to stocks in the stock market, which is great for diversification, and also has a 0%, yes, a 0% fund overlap to the other ETFs in the 3 ETF portfolio, literally making gold the best way to diversify your portfolio with a 0% fund overlap for the benefit of more diversification than you already do have. A commodity like gold is the safest asset for investors during times of uncertainty in the stock market and volatility when stocks fall. And then when stocks go down or even fall, investors flock to gold for safety, literally making it a great asset during both good times, bad times, and just overall for long-term investing in your ETF portfolio. My favorite gold ETFs are IAUM, BAR, and GLD. I'm going to replace our small cap exposure with GLD, a gold ETF. Now, GLD doesn't have the lowest expense ratio on our list, but it has the longest history for our backtesting purposes. So GLD will have a 10% allocation with the same allocation to the other ETFs like we did previously. And with that, this 4 ETF portfolio would have generated exactly 15.2% annual returns since 2016. Another great thing is that the volatility is the lowest we've seen from just adding a 10% exposure to gold. The amazing thing about gold is that it's a safe haven asset where it's also in a very limited supply. Its historical use is a store of value, making it less susceptible to dramatic price swings in the stock market, unlike stocks in the stock market. And finally, this 4 ETF portfolio also outperformed the S&P 500 by exactly 0.9% every single year. Now, other investors make the argument that gold is kind of like Bitcoin, and you'd be somewhat correct, but also very incorrect. So my honorable mention for this category will be Bitcoin. Now, my financial advice that isn't financial advice is to have Bitcoin at a 1% up to a 5% allocation in your portfolio if you choose Bitcoin. The last ETF category for diversification is an international ETF. However, if you already own VT or any other ETF equivalent, then you don't need international stocks since they are already in those funds as well. My favorite international ETFs are going to be VXUS, VA, and VWO. I would argue that some of the best companies are already here in beautiful the United States of America. However, there's also some great undervalued companies internationally for a well-diversified, complete portfolio with both US exposure and then international exposure as well. Same thing as last time, you guys know the drill. I'm going to replace our gold ETF with international ETF of VXUS by Vanguard. That is an ETF with both developed markets and even emerging markets for a complete international fund. So VXUS will have a 10% allocation with the same allocation to the other ETFs in this portfolio. And with that, this 4 ETF portfolio would have generated exactly 14.7% annual returns since 2016. Now, the returns are a little bit lower than the other ETF portfolios because international stocks have actually underperformed the market for quite some time. The volatility or standard deviation is also at exactly 15.4%. And finally, this 4 ETF portfolio also outperformed the S&P 500 by exactly 0.4% every single year. Now, so many people have been saying that international stocks aren't the best because they have underperformed the market, but we don't know what's going to happen. We don't know if international stocks are going to outperform, if they're going to underperform, if they're going to remain stable. No one knows. And people just have this weird thing that international stocks are all in bad and they're just bad companies or whatever. But if you have an international stock at a 10% allocation, it won't hurt to add to your portfolio for a complete diversification and just a well-rounded portfolio for you as a long-term investor. Now, if we rank the best portfolios from the highest returns to the lowest returns, we will see that coming in first place, we have the new and improved 3 ETF portfolio coming in first place, and then coming in second place is the 4 ETF portfolio with gold. Coming in third place is the 4 ETF portfolio with small caps, and then in fourth place is going to be the 4 ETF portfolio with international exposure. Now for your allocations, I know I did like a 60% or a 50%, 25, 15, then a 10% allocation. So tweak your allocations depending on your own goals, risk tolerance, time horizon, preferences, etc. You know the drill. Do your own research and be a long-term investor for your ETF portfolio. If you guys like this video, please give it a like and also subscribe because this cute puppy did. Now, if you guys want to see my 3 ETF portfolio video, you guys can check it out right here on your screen. I love you guys so much. Continue to crush in the stock market and take it easy. Peace.